Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In part 2 of this series on the Holy Grail sell on the 1 hour British pound, I want to follow up and show you how this trade unfolded. But before we get onto this, just remind you there's a risk of loss in trading and investing. It's always important to know and understand, and more importantly accept, that losses can and will and do happen. So let's go and have a look at the chart. Earlier today we looked at this Holy Grail sell setup here on the hourly British pound US dollar chart. If you remember, we went to the higher time frame and we placed our DP on here to see that it was looking like it was coming into large degree resistance, and then we went down to the shorter time frame to then look for the initial decline down there, then an ABC correction up into this Holy Grail sell. Now we had a look at this particular short trade. Now as you can see now, the British pound has not unfolded as anticipated. It didn't go down to the target, it reversed, went through the entry level and actually hit the stop level. So this is a good example to show and just remind you all that losses can and will and do happen, and trades don't always go as anticipated. It's always important to know. This is why we use position sizing to vary the number of lots contractual shares, in this case to risk less than 2% on a sample $20,000 account, so this risk here would only be one risk unit. So if you were trading the standard trade management guidelines, this would have been a -1 hour loss. So it's a good one to follow and just remind you and show you that losses can and will and do unfold and do happen. Let's have a look at this with a bit more of an advanced eye. As we teach in our MTPredictor training webinars, if a trade setup is going to fail, then the most likely area it will fail is the DP from the last swing. In other words, the DP from the wave B low, because this is the ABC correction into here, so it's the DP of this particular pivot. For those of you who have been following MTPredictor videos for a while, I did a section a couple of weeks ago where we looked at the last swing into the high as the area or to place the DP off, and that's exactly what it is. So this was the high, this is the last swing into the high, so this would be the pivot to place the DP off there. And as you can see, that's all that happened, is that basically the market then went down into the DP support zone. It then reversed or found support there, then reversed and started to go back up. So if you were a more experienced user, you'd probably have wanted to bring your stop to break even once it hit this level. Not necessarily because it had just gone beyond the 100% initial risk level, but because it had reached this DP support level here, which was the logical place where a reversal was going to happen if it was going to happen. And as you can see, that's exactly what happened there. So this trade did not unfold as anticipated. If we go down to a slightly shorter time frame chart, the 15-minute chart, here you can see the support coming in, the 60-minute support coming in at this level here. And in fact, actually on the shorter time frame chart, we had a VS buy setup here. So if I place the analysis on this particular buy setup, that would have actually caught the long trade up there as the British pound rallied up. So if you were trading on a shorter time frame chart, here's our 60-minute support with your 15-minute VS buy and the long trade there. You can see these sell setups would have been against our MTP blue trend. So it's interesting that on the shorter time frame, again, there was a warning that there was a setup in the opposite direction coming in at this particular low. That's why I was suggesting, if you're more experienced on the hourly time frame, once you get to the DP support here from the minor wave B, which we did at this level, then you'd want to bring your stop to break even. So for the more experienced users, this would have been a break even trade. But either way, it's important to follow up on these and important to show you that no matter how good a trade setup looks like at the time, not all trade setups are winners. And it's important to show these and just remind you that not only can losses happen, but also trades will not always go in your anticipated direction, and it's how to manage them when the market does not unfold as anticipated.